If you look at the latest numbers, and you've covered it in this morning's session as well, GDP just doubled that stood about 3.2, it's going to grow to 4.5. Capital markets are robust. Debt markets have raised over $1 trillion. Yes, a lot of it is from governments and banks, but we're seeing a lot of corporates also tap the debt markets. Capital markets, in this volatile environment, we had 50 IPOs. That's 13 billion. And of course, M&A and venture is maturing, and we have almost 30 billion of transactions last year. So very bullish about the GCC. We're seeing quality deal flow, and we're looking to invest. So maybe I step back here. So we at Mumtalakat, we're custodians of almost 60 companies across all industries. And what we're doing here is we're working with these companies to create value creations, but growth plans, but more importantly, working with partners to elevate these companies. And as mentioned this morning, the private sector is someone that we're basically bringing with these companies to create joint ventures, to create exciting businesses. And here I'll give you a few examples. So, with Racing Force out of Milan, they wanted a manufacturing hub to produce bell helmets and OMP suits. We spoke to them, participate in their capital, brought all their manufacturing here. With M42 in Abu Dhabi, they had a healthcare business that was expanding in the region. And we said, you know what, let's de-risk you as the sovereign, set up a joint venture together, and do that business together. So there's a lot of healthy deal flow that's basically competing with capital, and we're finding ourselves not allocating to outside, but allocating here because of merits, because of investment returns, and because of the opportunities.
Do you see, just before I talk about the flow of capital, gentlemen, I just want to pursue a little bit more with you, Your Excellency, in terms of, obviously you've done some other deals, we know in terms of taking full ownership of McLaren. Is this where you're going to be more active, both domestically and more active participant in the deals that you do?
That's basically the core of what we do. I'm learning from these guys, and the private equity playbook is something that we do every day. And as you mentioned, some of the transactions that were headline transactions, recapitalizations, have resulted in a record year for Mumtalakat in terms of returns last year. And we're also placed very well for another good year this year. So, on back of these transactions, we're seeing a lot of value creation that's being monetized and that's being created.
Which I hope the private sector, like ourselves and everybody else on this panel and others, and the public sector would need to work together to de-risk a lot of these four fundamental areas.
And this brings us back nicely, sir, to how you interact with global investors at this time. It puts you in a pretty unique position with a pretty unique story to tell, doesn't it?
It does, and I have the luxury of saying I'm long-term, so all this is noise, and I buy good businesses. But
you're a duration play. These other people might talk about it. You're real duration.
Yes, but let's joking aside, the core of any partnership is it's built on three pillars: great governance, mutual benefit between both entities, and an alignment of interest in terms of what we're doing. And for us, private capital brings a lot of discipline, a lot of funding.
Mm-hmm.
Sovereign wealth fund and strategic capitals bring long-term view and also de-risking. So it's the perfect marriage, and it's the perfect partnership.
Who's learning from who then, in terms of that relationship between you, the sovereign wealth fund, and the protagonists on the panel here, if I can call you that, gentlemen, with a gentle joust? How important is that relationship, Your Excellency, the partnership of international private capital, which is on this panel, and you as a regional strategic investor? Do you see that just growing more and more, and the potential?
No, look, I don't think anybody's learning from each other. I think they need prerequisites, we need prerequisites. We need experience and funding. They need planning and execution. And today, we are a region that's executing well. And I think that's been missing from the world. And I think all this private capital and all this international investments not only look at the capital that we have here, but look at the growth policies that we have here. Look at the teams that are delivering on big projects. And I think that's the relationship we're forming. We can't do everything on our own. We don't have the funding to do everything on our own. We would rely on foreign capital to do a lot of these projects. And I think from their side, it has to be a mutual benefit for them. And I think they get comfort that, you know, they're talking to stakeholders that they can deliver and they can bring value to the table. We're attracted to good businesses, regardless of industries. I know we've seen a tremendous shift in sports, as you mentioned. You know, we have an association with McLaren, and we've seen the F1 industry transform since Liberty Media took over, and today, you know, the valuations of these companies are just going north and north. Same thing with Chelsea and the Premier League. So we're seeing the vertical of sports show to sovereign wealth funds for good reasons. They're not trophy assets. They are businesses that are growing top line, bottom line, multiples are growing. So to answer your question, am I looking at sports? Yes, if the fundamentals support me to invest in these sports, then as long as it's not Chelsea, because I'm an Arsenal fan. But
Really was
that,
no, he's just poking away about Chelsea.
This is why sports is such a good investment, right? Regardless of topic, I think we own 32 some odd control companies, but I want to talk about McLaren and he wants to talk about Chelsea. So that's hence the reason why everyone cares about sports.
For us, I think private credit is essential. Banks can't do everything, can't fuel growth, and we've seen tremendous growth. And as long as what Bahdad and the panel mentioned, as long as your underwriting fundamentals are correct, your covenants are correct, this asset class is here to stay. And to be honest, will expand not only to North America, Europe, but to this part of the world. It's much needed to fuel all this growth. So I'm quite bullish on private credit. There could be a correction. There could be volatility.
A correction would be healthy.
Well, will be healthy. The people that have underwriting standards that are weak will disappear. Covenant light will disappear, and then the strong asset managers that have the track record will continue. So, private credit is here to stay.